Hi, Assalamualaikum Madam. My name is NURFARISHA ERINA binti JAMALUDDIN. My metric number is 01DAT20F1019. Today, I want to present about other current liabilities. As mentioned, trade payables are current liabilities. Other than trade payables, there are also other current liabilities such as accrued expenses, advances from customer, dividend payables, and tax payables. Okay, next, let us look at the objective of providing information on other current liabilities. So, firstly, we have to know the objective of providing information on other current liabilities. Assuming that the users of the financial information of one entity have asked question, what information about the entity's other current liabilities will be useful? And why will the information be useful? Okay, providing information on other current liabilities is important to the users of financial information such as suppliers, employers, government, and investors. For example, information on other current liabilities such as accrued expenses shows that they will be decreased in economic benefit during the accounting period in the form of cash outflow. Next, for suppliers and employers, it is important because information on other current liabilities such as accrued expenses and advances from customers are useful to them. It is because they can analyze the liquidity of the entity in managing their cash in an accounting period. Then, when the entity has ability to settle the liabilities, it will attract more investors to invest in the entity because they know the entity has positive cash flow which can generate more income in the future. Not only that, this also enables the entity to pay dividend to current and future investors, and it also enables the entity to pay taxes to the government. Okay, next, let's see the definition and classification on other current liabilities. Unlike trade payables, other current liabilities are not financial liabilities because there are no contractual liabilities to be settled. The settlement of other current liabilities in the future will only result in an outflow of resources such as cash. For example, Marina Sindan Berhad owes its employees RM3,000 for wages at the end of an accounting period. Alright, firstly, unpaid wages are not a financial liability. Then, Marina Sindan Berhad is not a party to be contractual provision. The company will only make an adjusting entry as accrued expenses at the end of accounting period. In MFRS 101 state, an entity shall classify a liability as current when, first, it expects to settle the liability in its normal operating cycle. Second, it holds the liability primarily for the purpose of trading. And third, the liability is due to be settled within 12 months after the reporting period. In MFRS 101 also state, other current liabilities are not settled as part of the normal operating cycle, but are due for settlement within 12 months of the balance sheet. For examples are the current portion of interest-bearing liabilities, bank overdraft, dividend payables, income taxes, and other non-trade payables. Now, let's look at for the initial recognition of other current liabilities. Other current liabilities such as accrued expenses, advances from customers, dividend payables, and others are to be recognized in the financial statement when, first, it is probable that an outflow of resources embodying economic benefits will result from the settlement of a present obligation, and second, the amount of the settlement can be measured reliably. After recognizing other current liabilities, let us now look at how they are measured. The initial measurement of other current liabilities is also at historical cost. At historical costs, liabilities are recorded at the amount of proceeds received in exchange for the obligations or in some circumstances. For example, income taxes at the amount of cash or cash equivalent expect to be paid to satisfy the liability in the normal case of business. Other current liabilities are also liabilities, and therefore, the same basis for measurement is used. The detailed measurement can be done as follows. For the accrued expenses, such as wages, salaries, commission, interest, and utilities, the adjusting entries will be debit expenses, credit accrued expenses. For the advances from customer, debit cash, credit prepaid revenue. Then, for the dividend payable, the adjusting entries will be debit dividend expenses and credit dividend payable. Lastly, tax payable. Adjusting entries will be debit tax expense, credit tax payable. Other current liabilities can be presented in Statement of Financial Position as shown in my report under Presentation of Other Current Liabilities. That's all from me. Thank you for taking the time to listen to my presentation.